Boniface Trading Group, and this is Paul Boniface. How y'all doing? I just wanted to do a quick little video tonight before I go to bed to get up and go to work tomorrow. It is 11 hours, 8 minutes, and 55 seconds until the market opens, and it is currently 10:21 Wednesday the 8th. So, what happened today? As you can see, the market's in the green. This is S&P 500. This is the Dow Jones. These right here are my current holds, my current companies I own. So $9,471 worth of Amazon, $5,980 worth of Verizon, $4,461 worth of Costco, and then I just started buying into ARR, SJR, and LTC. Okay, so these are my new companies I'm starting to buy into. I'm going to acquire more and more of these monthly dividend companies, and overall my portfolio is going to turn into a monthly dividend portfolio where I'll be averaging around $300 to $400 per month. I'm looking at of just them paying me to own their shares. Now, as you can see, the market will continue to rise and fall within these companies, but they will be paying me to hold them. So I'm currently up $33.72 on ARR, but here coming up this month, they're going to pay me like whatever cents per share. Okay, that all adds up when you own $2,205 worth of them, $2,000 something dollars worth of them, 2,000. You get my drift. Okay, Amazon doesn't pay you a monthly dividend. Now down the road they could, but they don't right now. Okay, they're also a very expensive stock. They're around 1,500 currently. I'll actually zoom in and show you just real quick. This is Amazon. Currently they are $1,891.97 per share. Okay, I plan on holding them until they rally up to about 2,000. I'll be making me an average of around $100 per share. I'll be up a little over $500, and I'll be selling them. So today I sold all of my shares, 200 shares of Twitter, and all of my shares of Starbucks, 60 shares. So I profited off of Twitter $122, and I profited off of Starbucks $86.70, bringing my overall portfolio to $37,120.50, and then I still have the $200 over on my other account that I'm going to slowly start building up to show people how to start a portfolio. So that would bring my two public portfolios that I'm going to be doing this YouTube on to $37,320.50. Okay, now I currently have $10,731.90 of cash on hand. That means I have the money in my account ready to buy more shares, but I have my 2,000 plus, 2,000 plus, 2,000 plus, and I'm going to be waiting for another dividend, ex-dividend, to be coming up. When you buy into a company the day before the ex-dividend, you can just hold it to the next morning and sell it and gain the rewards of that money they pay you for owning them, or you can continue to hold. Typically, if you use the strategy to just wait for a dividend to come up on a company, buy them right before it and then sell them to take that profit, there's enough other people doing it who are better at it than you. So if you just try and use that strategy, you're probably going to break even just about every time, or maybe even lose a little bit of money, because so many other people are buying in right before the dividend and then selling right after, that unless you catch it perfect and are really good at actually day trading, intraday trading, swing trading, you're not really going to profit that way. You're better off just holding. So I'm slowly going to get an overall account where I just hold monthly dividends. I'm going to be paid all throughout the month just for owning them, and then I'm going to take my extra cash and probably then buy into companies that don't pay a dividend. Or I could throw them right back into these companies. We'll see. It's going to be a whole new portfolio, and throughout the year, you're going to be watching me manage and totally transparent. So let's get into what happened with the S&P 500. Okay, this little drop that you're seeing up until all of today, I'm going to go over. Okay, so this is the S&P 500 E-mini futures. So this is the top 500 companies of the United States, but it is not the actual S&P 500. It is what's called the futures account. It goes 23/7. Might as well say 24/7. It does shut down like right when the market closes for a little bit, and then it kicks right back up. The market's actually open right now. So what you see is a little increase in volume when the Chinese market opens, and then you'll actually see when the European market opens, volume starts increasing in here because they like to trade it. It's a little harder for foreigners to trade our market, but there are brokers that allow them to do it overseas. Now, let's take a look here. So each candle represents one day. As you can see, this little sliver of a candle right here, I'm going to zoom in. That little sliver of a candle is tomorrow. Okay, it's just starting though today. So I can go into a minute chart and kind of show you what I mean here. So this was the end of today, the end of today's actual trading day. As you can see from the rally, there was a sell-off causing it to drop from around, I don't have my glasses on, around 3,267.75 as a high, and it dropped down to 3,252. Okay, that was the sell-off. But look at the volume here. This is what I was getting at. This represents the amount of people trading in the market. As you can see right now, nothing. Slight little hints of it. Now last night was different. Last night there was a huge spike in volume, and that had to do with the whole missile attack from Iran. This is weird though. This is the type of stuff I pay attention to. I drew this line here from the bottom of this wick and the bottom of this wick. Okay, when the market goes up and then drops, goes up and then drops, when it has these drops here, there's usually news that cause this. This one back here was with the whole Chinese trade war. It's really odd to me that, Trump tweets, hey, China is making this kind of hard, this trade deal. Market plummets. A few days later, yeah, we're making some progress on the trade war. Comes back again. It's weird. This one was really weird though. So I had this line drawn last night. The market started here, and then it started dropping because of the attack. Right when it got to this support zone, this line I drew, is that you draw it from here to here and you just let it follow all the way through and use it as like your next future movement. I'm trying to show you what I mean by that. So like right here, I would take this and continue it on. All right, so as it was dropping and I saw it get into this zone, as soon as it got to it, within the second, Donald Trump tweeted, all good. All good. Buyers started buying in, and I'm not talking little guys like me with the money I got. I'm talking billionaires, millionaires. Millionaires ain't really much, but billionaires and the higher echelon of millionaires, people that have millions and millions in the market, the big hands they call them, or the bag holders, the people with all the money. They just started throwing money in right when Trump said that, all good, and it rallied on up into today, all today, reached a high of 3,267.75, pulled back a little bit on into here. So that was that little sell-off at the end on into today. Today's a little red. Tomorrow we could have a little pullback into this range, or we could continue to rally. Now this is what people don't really talk about. The reason the market's been rallying so much is because the United States government created billions of dollars out of thin air because Nixon acts the gold standard. So we don't have to, when we say, hey, I want to create more money, we don't have to have that amount of gold to back it. Kind of like when you go to take out a loan to buy a house, you have to prove that you can back it. Our government doesn't have to do that. They can say, hey, we need money. So they create $2 billion and they start pumping it into the market. Okay, they use algorithms and machines, computers, AIs that pump it into the market like a human would, give or take. What's odd to me is nobody is realizing this. I feel like nobody's realizing that they've created money out of thin air. They're putting it into the market, allowing it to come up. Trump continues to have trade war issues, not trade war issues, trade war issues, not trade war issues. Is this just a way for smart traders, wealthy people, rich people, people in the know, inside trading to make money while they're stealing it from all the 401kers? Because the more research you do on how the money flow works, how money works, how you manage money, how you get wealthy, how you get rich, 401k is set up to steal money from us, not allow us to prosper and make money. Although you can make money, do the math. I don't want to hurt people's feelings. So that's that. Okay. What else do we got going on? I don't really feel there's much more to cover tonight. Just want to make a quick little video for everybody. And if you could, please, if you use Twitter, add me at Boniface Trading and subscribe to my YouTube channel. Hit that subscription button, hit that bell. It'll alert you when I make these videos, because I'm not going to make them every Sunday. It looks like every opportunity I get, I'm going to try and make a video here. I like talking about the market. I like keeping people up to date with what I'm doing, and that'll do it. Yeah, everybody have a good night and stand by for the next one.